I'm back.
Uh,
Sorry.
all right. No worries, man. You're good. All right, cool. So, who wants to go first? That's the real question.
I'll watch Korean. Sorry. Hey, I'm so
No problem.
sorry, but Jason, this is something I need to do over and over and over to memorize my thing.
No worries, man. You will get it down, man. Trust me, you will get it down.
Jeez.
All right.
Okay, so we're gonna go over the one of the trays that we did, right?
Mm-hmm.
Okay. So this was the one that we did yesterday.
Mm-hmm.
Oh yeah, this. Yeah, I didn't get a chance to catch um, the image before it took the tray.
No worries, man. Just make sure you fill out after your emotions afterwards.
Oh yeah, okay.
And like sometimes when I don't get a picture, I usually just take a picture of the candle that I entered. But I will scroll the screen to the right or to the left, so it could show that one candle that I entered.
Right. Oh, I have the after. I just didn't have the
Mhm.
before, stuff that happened.
That's fine.
Um,
So we'll just
yeah.
go from
So
step. You want to go step to step, or you want to go just to like the risk management part?
I'm okay either way.
All right.
Yeah. So
We'll just go from step one because I want you to finish because you're done with the trade checklist, right?
yeah.
All right. Well, there's some areas that you're not finished with.
Yeah, I know. Let's say accelerating. Never mind. I don't remember how to spell it. I'll fill it out later. um, let's see. So I guess we'll go through. So we did the fundamentals, the macro.
Mhm.
Right. Oh yeah, I noticed you have a divergent thing.
You could add
Bottom of it.
that.
Yeah, I
You
think
could just.
that's a good reminder.
Mhm.
Yeah.
All right. Cool.
Um, let's see. Oh, and I change all the fields so that if to kind of by default select choice
Mhm.
so that I if if it's something that I should be filling in, I this keyword I could look for.
Mhm. All right.
Uh,
Cool.
let's see. Yeah. So anyways, okay, and then the evidence. Um, so this was the Aussie tray and was M2.
Mhm.
So so I was just kind of filling in the thing. Oh, one thing I did was I made this. So there were some duplicate entries,
Yeah.
like like they ask you a few times where the pair that you're using. So I just kind of pull it from the beginning. So
Mhm.
once you enter it once, you don't have to keep doing that again.
Yeah. That's good. So.
Oh, and all the yellow ones are inputs.
Mhm. Nice. So I noticed that step three is fine. That's perfect. I noticed, but what I noticed is about step four, how you changed that. Ray has two different categories: the yen pairs and the dollar pairs, or any of the pairs.
Right. Yeah, what
It's
I
just
did was I buried all that in a calculation now. You don't have to worry about it.
really,
Yeah.
even with the yen pairs.
Yep.
Oh, nice.
So if you go here and oops, as I said there was a lot of duplicates. That's why I had a hard time kind of figuring it out. So if
Mhm.
you do like a yen,
Mhm.
um, then what happened is I will figure this out here. So so these four things are what I use for input. to kind of key up the calculation below.
Mhm.
So if I figure it's a yen pair, then I do some different calculations. So if you look at the top here, so just to kind of go through one example. So yen pair field is a E71. So E71 is, then I only do the multiply by 100, which is, what you need to do to figure out the yen, the decimal places for yen.
Mhm.
But if it's not, then it'll do it 10,000, which is kind of for all the other pairs.
Okay, cool.
Yeah. So that's why I said, a lot of things that are kind of fairly mechanical, but you have to kind of really keep tab of it. I try to make it one thing, then you don't have to keep worrying about it.
Okay, cool.
The only thing I couldn't figure out is I couldn't make all these digits go away. So even if it's yen, it's still kind of 5 digits.
Oh,
But oh well.
Oh, okay, yeah. That makes sense. All right, cool. So risk management. I noticed that you put on step number 4.
Uh-huh.
I noticed that you put 8% that you're willing to risk out of your capital.
Right.
But I see that the probability of this to win is 90%, but you put 5%. That's how much you're willing to risk. So if you pull up your calculator,
Mm-hmm.
you would divide 5 divided by 8. It would equal to 62.5, correct? So if you move it to decimal points, 2 decimals, you're actually risking 62, or the probability of the win is actually 62.5%. Or that's how much you're risking. Or that's the probability of that trade. So you're technically saying that the probability of this trade is 62.5%, not 90%.
Right.
Does that make sense?
Yeah. No, I know. I know what you're saying. The only thing was though, so I think some of these were, one thing that I'm trying to figure out is to kind of get a bearing on the risk versus the percentage to put in. Now, I guess, how often do people go into trades where it's less than like 80 or 90%?
I have no idea, man. Probably a lot. Or what I'm guessing is that they don't know how to do the percentage wise. Yeah.
Yeah. Well, first thing is I'm kind of guessing on some of these, probability too, right?
Okay. And this is where you have to fix your guessing, because we can't no longer guess anymore because we're now professional traders.
Right.
Because if you start guessing, we're amateurs, and we're no longer amateurs at this point. Right. We're beyond amateurs. We're professionals, and this is where the meticulous has to come in play to see, does your evidence fit all the criteria? And how, for instance, you're learning M2s, is there any divergence in the indicator? If there's a divergence in the indicator, boom, that's just another. The probability just goes even further high, goes higher.
Right.
For instance, if it's in the level of demand, that's, for me, that's like 20% probability is going to win. What's the other evidence that, for me, or for M2 going long, what is there, is there more evidence? For instance, the EV star curve makes a higher low. Boom, that's a clear that's even a higher probability. So instead of 20%, it just goes up to 50%. All right, it's cool. Let's see what else is there. it's touching the trend line, is like in a real strong level of demand, uptrend. Oh, it's an uptrend. All right, cool. That's another 20%.
Mm-hmm.
So that's 70% probability that it's going to win. The macros, we look at the macros. Obviously, that's the number one priority. For instance, if we're looking at the Aussie dollar, we're forecasting that that gold is going to go up and the dollar is going to tank. All right, cool. That's another probability that my probability just keeps going higher. So instead of 70, it's now 85%. It just went up 15%. If we see another divergence, we see the divergence in the indicator, then boom, that's like what, 95 to 100% that the probability is gonna go my way. So instead of guessing on the probability, that's where you have to be meticulous and look for your evidence.
Yeah.
Right? Does that make sense? We look for the evidence.
So I don't have that kind of stuff built in yet.
Oh, it's fine. You can start now.
I know. But in the meantime, if I'm going into a trade, I'm guessing.
Yeah. But now instead of guessing, ask yourself questions. What will make this trade a higher probability of winning?
Right.
If you ask the right questions, you will get the right answers.
Right. Yeah. No, I know what you're talking about. There were a few things that I missed, but I am kind of looking out for some of those clues now. Yes.
It's perfectly fine, man. Everybody has their own, everybody has their own different journey, and yeah.
You know what I also have to find from you guys, and or maybe from the classes, not like you're saying, Chris, not only the clues, but the little things that will make me actually, how could I say this, will give me a better indication of the direction of my trade. Besides the patterns, besides the macros. To my browser, yeah, like before I had this thing, right? I'm waiting. I was waiting on the news to pop on my screen, basically on the time, right, on the clock, and I was constantly refreshing my browser. So then I installed a plugin to my Chrome, and I set it to how many seconds I wanted to do an auto refresh just on that screen, so it's constantly refreshing every 5 seconds.
Yes.
Right. So for when the news are coming, I wanna find like a different area, man, where to find the news, or I don't know, like just a different view from others that they're indicating bullish or this is what's gonna come.
Do you use a different browser?
No, I use Chrome.
Yeah, no.
I added a plugin.
You could set up a different, use a different browser with different settings.
Yes. No. I can do that. Yes, but how do you get the news right away on your screens? Are you refreshing your screen, or you have an auto refresh, or?
Are you asking all of us?
Yeah, for you guys, do you guys have like when the news are coming, right? If it's let's say we have news in 11 minutes.
Mm-hmm.
So 2 minutes before 8 or time, do you guys set up anything?
Oh no, because if you look at the macros or like Forex Factory, it will have like a reload right next to the news that's gonna happen. So I would constantly click on it and say, all right, hurry up. But at the same time, like the news won't come in like maybe a minute or two after. Why? It's because there's so much information in that little box. It's like it needs to load. It needs to take time for it to load to actually be put up in the website. That's why it takes like a minute, or it takes pretty long for the news, like for the forecast or the actual number to pop up, because there's so much information going through. And does that make sense? But like there should be like a little circle, like there should be like a refresh button. Yeah, there should be a refresh button. Yeah, and I would just constantly be clicking that.
Oh,
'Cause yeah.
oh, so I have maybe I'll share the plugin with you guys. It's a plugin, and what it does, Jason, it does an auto refresh on that page where you're seeing or you're getting the news, and it'll instead of clicking, the browser will do it for you automatically within seconds. You can set it up to different time lapses, right? Like 3 seconds every 5, 10, 15, 20 seconds. It'll have an auto refresh. That way you don't have to be clicking.
Oh wow.
Yeah.
That's cool.
But I want to see something else, right? Because I see my browser refreshing, and it does it really quick. But it's just the thing that I want to see. I want to see it like 30 seconds before.
Yeah.
or 15 seconds before, so I can hit my increase my position size or something like that.
Yeah. You know, you could actually get news like if you like Bloomberg. They actually have that, but you have to pay. If you want to get news like before anybody, you would have to pay a certain amount. For instance, if you want news like probably like a minute or two before everybody, that would cost $25,000 that you would have to pay Bloomberg. If you want to get
5, wow.
Yeah,
Per month?
Per month.
Maybe when we're actually trading a mail, sure, we can do that.
Yeah.
We'll share it.
That's like a minute or two before everybody in the world. They'll give you the news. It's not insider information. You're just getting the news before everybody, and that's where you choose what you want to do by yourself.
They must be paying the box for them to be the I don't know, have them the preference, right? Or what? Yeah, the preference.
Yeah, exactly. Well, okay. We'll go back to Chris's training checklist.
Yes, please.
So notice that you put 5%, right?
Yeah.
And you said the probability would be 90%. Technically, since you said the probability is 90%, the percentage that you're willing to risk should be 7.2%. And that would equal 90% of the probability that you're forecasting that it's going to go. So if you pull up your calculator, you put 7.2 divided by 8, because that's 8%, that's the amount of percentage that you're willing to risk out of your capital. And if you equal that, it would be 0.9, technically 90% probability that you're forecasting. Or that would be the probability, the 0.9, that would be the probability that you're forecasting. Does that make sense?
Mm-hmm. Yeah.
All right, cool. So that's how you forecast, or that's how you get the probability. You look for your evidence.
Right.
You look, yeah.
And the one that I keep forgetting is the stochastic divergence. I keep forgetting to look at that.
And it's fine. It might not even show like divergence. It might show it at times, but that's where the meticulous comes in play, and you look for it. If it doesn't have divergence, then it's fine. Let's look for the other evidence. Is it an uptrend or is it a downtrend? Did it create a higher low? Did it create a lower low, or did it create a higher high? You look for those based on that methodology, and yeah. That's what makes your evidence, and whatever evidence you have that supports what your intention is, then create the probability. Do you think it's 80%? Do you think it's 50? If it's 50% and you want to test trade, then put it in. Yeah.
Yeah. Hey, how much do you guys usually put in for a test trade?
Well, depends. If I want to risk 1% of my capital, the trade checklist will tell me.
Okay.
Mm-hmm.
Well, my question is not how much, it's how much time you wait to get in with the test trade.
Yeah, because timing is everything.
Exactly. So it's not about how much you put in; it's how much time you wait before you jump in. Because you guys have seen this or have done this. Like I'll be doing it, and right when the news are happening, and it's moving. I'm gonna say it's going long, and then I can do that. The train it's down, but then it starts going on the uptrend. All of a sudden, yes, it spikes very volatile. There's so much volatility, so you hit it up there, and I'm thinking it's gonna go long, but then boom, it just kind of bounces back. So, assuming that it was changing direction.
Yeah.
And yeah, that's what when do I get in?
and that's why before news, if there's high impact, that's where you forecast where price is gonna go in, regardless if you answer it and stuff. Like that's why you answer it before the news and let it ride.
Just let it ride, right?
Yeah, that's what happened with me in the Aussie dollar news. I put it in, it went down. It just went down like 2-3 pips, and then boom, all of a sudden, like in half a second, it went up 10 pips, and then another half, and then 2 seconds later, it went up 20 pips. It was like, oh crap! And the next thing I was just, yeah.
I actually have seen that it starts going down, right? It starts like so much force coming down, and all of a sudden it just spikes up.
Yeah, and in whatever attention it is that you want for like the Aussie dollar, for example, it went down 6 pips like real fast, right?
Yes, I think actually I was in that trade.
You would enter there again because your intention is to go long, right? And trading is already a risk, and we already have forecasted the macros and stuff. We're already bullish with gold, so obviously that dollar is going to fail. So the Aussie market is going to be strong. So if you see that bullish bar that went down 6 pips, boom, buy again. Because you already know the intentions. You already know you're going to win. If you entered it there, boom, you would have made more money. Because that's what is called, that's the strategy that you guys would learn in advance. That's basically averaging out or averaging down. Your intention is to go long, even though price is still going down, you will still keep buying, but you will still have a limit of how much you're willing to risk. But if it's in your upside and there's news, and it's already in your favor.
Gotcha.
Yeah.
Cool.
All right. Cool. But Chris, do you understand how to do your percentages? It's just a matter of practicing, right?
Yep.
Nice. Very nice. All right. Cool. I'm going to pass me the screen, and I'm going to pass it to Tell It.
Let me move my my checklist. Okay. Now this didn't work. Okay. Yeah, this is the basic. It's actually this is a I'm pulling a template. I was paying attention to you guys and I didn't complete it, but let's say when I do this once again.
All right. Before you continue yours. Continue. Go based on the M2. Go to your charts and look for it past M2, and we'll analyze that, and we'll go step by step, or we'll go step by step. Look at this is going to be just practice.
Okay, M2.
So do you need me to give you some time for that?
No.
Okay. So you pull up your chart. So me and Chris can see. Look for a past M2. Doesn't matter if it's short or long.
Okay, this one I could think of. All right, maybe this one. Right here. I'll just circle it. This one right here.
I wouldn't consider that one. How about the one, that one right there with that big bullish bar?
This one?
Yeah, and then the one to the right. You see that Serenity. Let's check out. Yeah, the one with the big bullish bar, and then the next candle is Serenity, and then the third candle is a bearish bar.
Yes. That will be the evening start, right?
Mm-hmm. So we'll do that one. Check your trigger price to see if it actually meets. Since we're selling, keep it in the bid. Good job with that.
So let me move my thing here. Yeah, let's see.
What's the middle? Point at the middle candle real quick. All right, 61. That'll still be all right. Just put a little bit for position size. All right, now let's find out the trigger.
The trigger will be, I'm calculating it on my end right now, will be 0.7719 plus 0.78 71 divided by 2. So trigger price will be $7.95. That is my trigger price, $7.95. So it doesn't qualify. That's it.
All right, let's look for another one.
Yeah.
Just scroll back to the past. Or scroll back to the past. Let's find one.
I'll do this one.
Yeah, let's do that one. That morning star right there.
Yes.
All right, let's see if the criteria meets. Oh, it doesn't. The D is at 68. So let's look for another one. Scroll a little bit down.
Wait a minute, Jason.
Yeah.
So you're already looking at this numbers right here by looking at it. What's the? So you wanted to be at 20%, right?
Yeah.
Below 30%.
Yeah, it's 60.
Okay.
So
yes, it's too high.
Yeah. So
Okay,
go scroll back. Scroll to the left.
Let's see.
How about that one right there? Right there. Boom, baby. That one. Let's do that one.
This one is. Okay, so
do your trend lines, your supply and demand. It just scrolls to the candle, like to the left, so it could just actually be the Morningstar pattern. There we go. All right. There we go.
Just so it's more visible for all of us.
Yeah, is it me or I'm pretty excited to teach you guys or go over the trading checklist. It's just me. It might be just me, but I want you guys to master this and master the percentage. Because I know you guys will go to a different level. Trust me, you guys will. Wow.
No, man, you're doing awesome. To be honest, I feel if I don't attend the classes, it just doesn't make me feel good. I feel like, and that's at times it's not that I don't want it, just
It's fine, man. You could hit me up, tell her. Yeah, I'm like down the street from where you work. I could come visit you.
That's what I'm gonna have to start doing again.
Yeah, let's do it.
Dinner. So, all right. supply demand, man. Supply demand this is actually a morning star. Ooh. So then I gotta do my
Trend lines.
so 2180, this definitely qualifies.
Qualifies.
It does. So, do you want me to create supply demand really quick?
Yeah, do it. And make sure you draw your trend lines too.
Oh yes.
But draw your supply first and your demand. So once when you finish drawing your supply, demand, and your trend lines, let's look for evidence that will support this to go long.
Okay.
Tell it before you draw that one. Notice that on top of that, there's all these horizontal lines all bunched up together. You see that? Yeah, and that, or move that a little bit further up. Your rectangle box.
Right here?
No. Like you had it right where you first started at the.
No.
No. That horizontal line, or all those horizontal lines right there. But don't go too down.
Oh, gotcha. Just those.
Yeah, that would be a strong demand level.
Gotcha. What would I consider this? It's demand.
That would, that would be equilibrium. If you move it up a little bit, if you move the rectangle a little bit up, you can move it a little bit further up too, but that's fine. That would be equilibrium right there.
Just to distinguish it. Okay.
Nice. Nice. Yep. Nice. All right. You did your supply and demand. You did your trend lines. All right. Now let's figure out. Just pretend that we already did the trigger price. We already did the trigger price. It meets the criteria. Now let's find your evidence. What is the evidence that support this morning star that will go up?
Okay. Thank you very much. At that moment, before or after, I'm gonna look at the macros.
Oh no, we already did the macros. So
okay.
We already did the macros. We did everything.
Yes. Okay.
We're bullish with gold. We're bearish with the dollar index.
Okay.
So that would give us one. That would give us that already gives us one evidence. So the probability of this going to up, that's 20% already. The fast stochastics. What's the fast stochastics with this?
20%.
20%. So that's another for me. What is that for you? How much percentage? How much percentage would that give you?
That gives me a higher percentage, basically.
What's the number? What's the number? Because we already have 20% that's already going to your upside with the macros. Because that gives you we're already bullish. It gives us when we look at the macros, it will be a clear indicator that gold is just gonna go up, and then dollar index is gonna tank. So that's already one strong evidence. What would you give that for macros? We're bearish with dollar index or bullish with gold. What percentage would you give that for your evidence out of 100?
Out of 100, 80%.
80%? All right, you already got 80% evidence. Fast
Well,
stochastics.
my
It's
my
already.
my Jason,
Mm,
the way I could or think that my 20% evidence is because I'm already at a lower percentage of my this area, right?
mm.
So
So
if
just
I was at a higher, right, then my percentage will be so low because I'm up here. But when I'm up here, I know my it's just gonna go up,
I know,
basically.
but just like if we're doing a train checklist from step one, you don't even you're not even looking at this chart first because
Oh,
you're
okay.
step one or like even before you enter a trade or even before you even look at macros, you already know who you are. You're a beast. You're profitable. You're gonna make money. So now we go to step one. Just ignore this chart for a second. We already forecasted that dollar index is gonna go down, and we're bullish with gold. Correct?
Correct.
So out of that, from first step one, the
hmm
macro fundamentals was what percentage would you give that?
I would give it 80%.
Before 80%, like before you even look at the charts, like well, obviously we're looking at the Morningstar, but before we analyze the dollar, before we analyze the Aussie with the dollar, we at first analyze the macros. We
50,
forecast
50,
50%.
50%.
All right, you give it 50%. All right, we're done with macros. Now we're analyzing the chart. So go back to your chart.
hmm
All right, so now we look at the Morningstar. Fast stochastic meets. So
Yes.
how much more percentage would you give it that
I'm
you're gonna
adding
win?
actually another 20% because fast stochastic it's meets there, so
Nice.
it's increasing my by 20% now because it's actually at a low. It's not 30. It's actually at a good
Nice.
percentage.
All right. So now the probability of this trade is 70% out of 100. All right.
Correct.
Let's look for more evidence. It's in a level of demand. Is that a stronger indicator or is that more evidence that support this trade to go bullish?
Yeah, it's at a level
It's
of
equilibrium.
equilibrium. But also looking at the trend, it's a downtrend. So
But look at
um,
what the middle candle created. It created a higher low.
yeah, that's
So
true.
so that's more evidence. Is in level of demand. It created a higher low, so it's a confirmed uptrend. So how much more percentage out of the 70% would you go like? Is your probability of
Oh,
winning?
now another 5% right here.
Okay, so 75%.
75%. Yes, because it created a higher, and there's a lot of force going
Mhm.
along.
All right. Now let's look for divergence. Is there any divergence in the indicator? So we will look at the low, which is the middle candle. We'll look at that one. So the fast
hmm
stochastics is, what is the fast stochastics? The actual.
It is actually the a little bit of divergence.
So what's the actual fast stochastics with the middle candle in the Morningstar pattern?
Fast stochastics.
So if you click on the candle, so what's percent D, the candle, and you click on it.
It's 75,874.
What do you mean? No. That doesn't make sense because it should be like around the 20% area.
Okay, then I'm not.
Yeah,
Or
just
look,
click on it. There you go.
yeah, that's what I mean. So there we go. So that the percent D is 21.90. So if you look at the previous low, so 4 candles to the left,
Mm-hmm.
if you go to that candle, that one right there,
Ooh, wow.
14.52, that's no divergence. That's still cool. Oh, yeah, that is divergence.
This
So,
is divergence right here.
yeah,
Yes.
so the indicator shows that it's going up,
Correct.
right? but
correct.
price is going down. So that doesn't make sense. So obviously that's a clear indicator. So what's your probability? You have 75% probability that's going to win out of 100. If you have clear divergence right there, so how much more percentage would you give?
Another 5%, man. So now
Another 5%, 80%.
80% now.
Cool.
Because of this, actually.
Mm-hmm. So you have 80% out of 100. So your probability of this trade is 80%. 20% of it is highly gonna fail, but you have 80% is highly gonna win. So now if we go back to your trading checklist, so we'll go to step 4. So we already did all that. We're just going to risk management. So your account says you have $41,960.36. What's your maximum risk that you're willing to risk out of your account?
5%.
All right, change that to 5%.
Okay.
Nice. Now, the probability of winning out of 100%, you would put 80% on top. Put 80%. So now we have to figure out how much percentage out of this 5% are you willing to risk? So if you pull out your calculator, and we'll
my calculator on the screen.
So this is where we have to figure out how much of that capital is 80%. So we'll try 3 divided by 5. How much is that? That's 60%. We still need
3 divided by 5?
Yeah, 3 divided by 5. That's 60%. So that wouldn't be good. So let's try 4 divided by 5. So that's 80%.
Yeah.
Nice. So now you're willing to risk 4% out of your equity because that's 80% probability that you said that's going to win.
Correct.
So now, how much are you willing to risk? You're willing to risk 4% out of in your account.
Correct.
So if you change that 1 to 4,
right?
Yeah. So you change that to 4%. Because that would equal 80% probability that you said that was going to win. Does that make sense to you that we have to do that? Because we already said that it was. You said that is an 80% chance that's going to win. So now we will see how much of that capital of your capital is 80%, which is 4%. So now.
Times 4, 16.
Well, it just depends on your stop loss. This is now we're going to go back on your chart. This is now how much we're going to see what is your stop loss. So cancel that. So what is the low from the evening or morning start? So low of that is 0.75718. So we'll subtract 15 pips. So it'd be, how much would that be?
Okay.
I'll give my.
The low is 75, 78. 75, 78. I forgot what it was.
We just click on the candle. All right, so that one would be 0.5718. 75718.
Okay,
75.
and it's the 1.8. And it's the 1.8.
Subtract that number from 15 pips. That would be your stop loss.
That is 75.68. So
All right. 68.
568. And then
Nice.
change that
Block.
little. That's 15 pips, man.
All right, cool. This is the hourly.
Yeah.
All right, so pretend that what is the close from the current candle right there? That one right there. Say we entered at that close.
Yeah, 75956.
All right, so write that down because that's pretend that we entered at that price, at that closing price. So it would be the closing price of that would be 0.75956. All right. So now,
Enterprise. Okay.
yeah, that would be our entry price. So now we will subtract the entry price from the stop loss to figure out how much pips that is. So what is the stop loss?
The stop loss should be I had to label it. It was 7
So if you change, like,
175.
or like if you click on it, like change it, like change. Click on the stop loss, change,
Yes.
and
Sorry.
put show in background.
Should
Oh no, is it to show? Oh no. Okay, never mind.
It's showing there though.
Okay, so we'll just see at the black line. So your stop loss is 0.75568.
8, correct.
Yeah. So we will subtract the entry price from the stop loss. So the entry price is 0.75956. The stop loss would be 0.75568. We'll subtract that.
That went away. Gosh, I had it.
So I got 0.00388. So that's technically 38.8 pips that you're willing to risk.
38 points.
38.8 pips that you're willing to risk.
Really?
Mhm.
So I have to move it this
No,
more?
No, it's fine. That's how much you're gonna lose if the trade goes bad. So now
okay.
we'll go back to your trade checklist. So notice that. So we'll change it, like change the pound and the Aussie, change it, pound and dollar, change that to Aussie dollar on step 4. So now you see how the pair, it says pound against the dollar, change it to Aussie against the dollar. Oh, the second one. Well, second right there. And the pips, I know it's 100, or one standard lot is 10 pips, so that's fine. So write down your entry price right there. So your entry price was 0.75, or just write it down. I got you. So 0.75.
0. Okay, here. 0.75.
856.
6.
All right, now go to your stop loss. Your stop loss is 0.755.
0.75568.
All right, click on it. Click OK. All right.
It changes
so
everything
yeah,
now.
so it's 51 lots. So
Ooh, really?
Yeah. So let's
And
see
this
how.
is playing 4%.
Yeah, out of $41,980.36. So let's see how much money that is. Let's see how much money are you willing to risk. So notice that you're risking 38.8 pips, right? So
Yes.
50. Let's see how much 51 standard or 51 lots is. So if you pull up your chart or like grab your chart and don't click buy, but see how much $51 or 51 lots is. So put 51. All right. So every pip. No. You see how it says per pip? It says 5.10.
5.10.
So every pip that goes up or every pip that goes down, it'll go down or it'll go up $5.10. That's per pip. So it's 5.1. So now bring your calculator out. So now we're gonna find out how much that is if you lose. So now times 5.1 times for the amount of pips that you're gonna lose or you're willing to risk, so it'll be 38.8. 38.8 equals that. So your total risk is $197.88.
I'm sorry.
That's how much you're willing to. That's how much you're willing to risk if the trade doesn't go your way.
Okay.
So you're risking $197.88.
And that would be.
Or just like that's just the amount of it doesn't say how much you're willing to risk, but that's why for my trade checklist I put how much money I'm willing to risk or out of that trade. So out of this trade, are you if the trade doesn't go your way, you're gonna lose $197.50 plus commission costs, which is probably like $5 because you enter in and enter out. So the total amount of money you're gonna lose is $203.
$203. Okay.
$3. And I don't really worry about the targets, but let's just do the targets now. Just write in the side, just write in this empty spot, just write total risk $203. Total risk 200.
What am I writing? Total numlock. Total risk. Again.
So right, if you're nervous, tell it. I don't buy it.
No, I swapped my keyboard, man. The other one was one of those cordless, and I hated it. But okay, total risk it was what again?
$203.
$202. Very nice.
All right. So now let's go to your chart. And say that we're gonna place our first target at supply level. So let's put it on 0.76319. You see that price right there? 0.76319 is on one of the horizontal ones. Go up. When you go up, further up, 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 up. Whoa. One more horizontal. That one right there. So we place our target right there on supply level. So that is 0.76318. So 0.
Let me just write it down.
All right.
0.
So 0.7632.
0.7632.
That would be our target limit, let's just say this is our only target limit. All right. So now we will subtract this number from your entry price. So your entry price was at 0.75956. So that was your entry price. Do you remember that?
Yes, we had it over here.
Mm-hmm. So your entry price.
0.8856.
Oh yeah, sorry. So now we'll subtract the target from the entry. So the target is 0.76320. We'll subtract that.
0.76320 minus the target.
Yeah, the target, which is. Oh wait, did you put minus the entry order? So the target minus the entry. So that is your target right there. We'll subtract that from your entry price.
Okay.
To see, and the only reason why we're doing this is to see this is how much you're willing to gain. Does that make sense?
Yes.
All right, cool. We figured out how much we're going to lose. We were going to lose 38.8 pips, which is about $203, including commission costs. Now let's do how much are we willing to gain. So how much? What did you get? How many? So entry is 0.78856. So subtract that.
0.8856. Minus
the entry order, which is your entry order, right?
Entry price.
Is that right?
Yeah.
This doesn't make sense. Click on the current candle again one more time, because I think it's supposed to be 758.
75851. This one?
No, next one. To the right, that one. What's the closing price of that? Because that's when that candle closed, that's when we answered.
The price of this one is 0.756.
Oh, okay, that's what you got mixed up. So this is our entry price. The close is our entry price. So 0.759. So that's our entry price. So 0.759. 0.75956. All right. So notice that you made us. I 0.7. All right. So yeah, just delete that and put the entry order.
Okay.
See how everything changes? Now it's 4.33. So now, yeah, this changes everything. So let's see how much that is. So if you click on that, let's see how much 4.33 lots is. So just click anywhere and buy.
Actually, wouldn't you normally be entering at the close of the bullish candle?
Yeah, but let's just say that it ends like you hesitated to get it at a better price, and it goes down.
Yeah.
And this is where you enter. So put four. Yeah. So instead of 1, put 433.
443.
3. Yeah, 1 more 3. All right. So per pip is $43.30. So now so that's per pip, $43.30. So now we will times, bring a calculator out. We will times $43.30 times it by 38.8.
Wait, but that assumes you're buying a micro lot, right? 433 micro lot.
Yeah, because look at his equity. His equity is at 41,000.
Right.
Yeah. So. Wait. 40. Yeah. No. 43.3. Tell it. Clear that. 43.3. So times it by 38.8. 0.8, because this is your stop loss.
Oh, okay, that's right.
So what would that equal to?
Uh,
All right, so now this changes everything. Your total risk is $1,680.04.
yes,
$1,680.04. That's how much you're willing to risk.
correct.
So now let's figure out what's your reward. So now I'll clear that up. Now we'll subtract your target entry, which is 0.7632.
Sure.
We will subtract that from your entry price. So clear that. So type in 0.7632. Subtract it from your entry price. What is your entry price again? It's
Shit. Let me make sure I
forgot to write it down. Oh wait, leave it there. Your entry price is, let me write it down. 0.75956. All right, good. Bring your calculator out.
Okay. So
Subtract it from 0. Oh no. All right. So put the target entry. So put 0.7632. Subtract it minus 0.755956. No, wait.
No.
It was 9. 0. So clear. All right. So let's do it again. 0.76.
0.76.
Oh, you messed up. You missed the 7. It's all right.
We're going over a few minutes, okay?
Subtract
minus
it. 0.7.
6.
5. No, it was 5956.
I thought I had it wrote it 950.
No, it was 0.75956. That's your entry order.
Sorry, man.
It's all right.
32 minus
0.759.
0.75956.
What does that equal to? 36.4. So 36 pips and 36 pips.4. So now we would times 36.4, or we clear that and just put 36.4.
Let me write this down. So 36.4.
Times it by 43.3. And that would be your reward. $1,576.12.
Oh, wow.
Without commissions. If it was commissions, it would be a little bit lower. But that's how you do your rewards. Does that make sense?
Yes.
So the point of this, like this class, I wanted you guys to learn how to do the percentages, and I wanted you to know how much percent are you willing to lose or willing to gain when you enter a trade.
Okay.
So does that make sense, how to do the risk management part?
Yes.
All right. So it's just a matter of practicing with you and Chris, and looking for.
I think I had to practice on the checklist, and then it should be very easy.
Yeah, it will be, man. But
confident.
That's nice. So do you guys have any questions, queries, challenges at this point?
No. I think not on my end. Maybe Chris?
No, not this time.
All right, cool. Was I being very detailed?
Yes.
Yeah, that was
Excellent.
good.
All right, cool. And we're gonna go over this more often because I want you guys to be masters at like finding out your probabilities and actually like knowing your risk, calculating your risk, and calculating your rewards. Because this will come in handy in the future. Trust me.
Yes. Absolutely.
All right. Nice. Well, you guys have a good night. Enjoy the rest of your night. And I'll see you guys
Fun.
later, man.
Yep.
Couple hours, man.
I don't know if I might be sleepy.
Next Wednesday, Ray will be late. That I know.
Yeah.
Okay.
All right, fellas.
Thanks so much, Jason, for your time, and Chris for your help. So.
Hey,
All right.
nothing to
Well, you guys enjoy the rest of the night, and I'll see you guys later.